Good afternoon, everybody.
Thank you. Good afternoon.
So, Gianluca, the way in which the panel discussion will work is that I will ask each of the speakers to do a little bit of further introduction, telling you a little bit more about why they've decided to come here today and support CDP and the Japan Ministry of Environment and others with our objectives over the next couple of over the afternoon, and then we'll slot into a few specific questions. So, Gianluca, over to you.
Gianluca Manca to moshimasu.
I'm Manca. Thank you very much for this opportunity. So, to participate in this conference is my great honor.
Thank you very much, CDP, for having me here today. Horizon Capital that I represent is the asset management firm of the Intesa Sanpaolo Group. Intesa Sanpaolo is among the top 5 largest Eurozone banks. We're a large group, and in the asset management, we have roughly $300 billion under management, which means we deal with a lot of issues. I'm quite proud to say that we've been dealing with sustainability issues for quite a long time. Already 20 years ago, our chairman, Andrea Beltratti, wrote this book, Keizai Seichou to Kankyo Shisan, Models of Economic Growth with Environmental Assets. It's been translated also in Japanese. More so, our CEO, Tommaso Corcos, is among the first signatory of the Code of Stewardship. So all this experience we accumulated in 20 years of dealing with these issues is something that is giving us a perspective of why water is so important and why we're supporting so much the CDP in pursuing this goal of integrating water into the mainstream analysis, because this is what we are talking about.
Thank you, Gianluca. It's very interesting, and hopefully we'll have a chance to dive a little bit more deeply into that. So we've heard a lot today about the risks and potential opportunities, and perhaps it's therefore obvious why investors care about this issue. Perhaps you could tell us a little bit more about what you feel the role of institutional investors, and perhaps using Horizon Capital as an example, what is the role of these institutions in motivating and supporting their portfolio companies to take better action?
Well, I'm thinking of a very down-to-earth example. A few weeks ago, I met the finance director of a very important Italian pension fund, who told me that he's very interested personally and representing his own pension fund in the water issue. So this tells me clearly that this is an issue that individuals are feeling on themselves as much as large institutions, corporations. Well, I can tell you a little example. In Italy, an average family in the central of Italy pays 52,000 yen per year just for the tap water that we get at home. So this means that we had an increase of more than 75% in the last 5 years. This is happening almost all over Europe. So it's something that individuals feel. It's happening for individuals as much as for corporations, large corporations. I remember when I was a young student, I was taught that water was, yes, considered sort of a commodity, not much, but it was abundant and free of charge. Today is a commodity with a price that is increasing. So this is the important issue that pension funds now, because they look at the long term, they're really considering, because they're seeing the cost of this commodity increasing in the balance sheets as much as in the P&L of the companies they invest in. So they cannot but take it in great consideration.
And you mentioned pension funds, Gianluca, already. We know that the whole space of responsible investment has changed quite radically in the last few years. Perhaps you'd be so kind as to reflect upon that and explain to the audience where the pressure is coming from and also potentially where you see that going in the future.
Yes. In the very beginning, when, well, many years ago, almost 15 now, when I started to collaborate with the UNEP FI, we noticed that there was a lack of information already then. Lack of information meant that not only the companies were not disclosing about their sustainability issues to the market, but also the market was not asking the companies for those information. So 15 years ago, there was a revolution because the asset management firm were engaged by the asset owners slowly to go to the companies and ask for those information. It's not been easy because the companies were not prepared 15 years ago with their own accountability to disclose these numbers. Now they are starting to do that, not in a perfect way, but they are starting to embed into their finance communication also data that were not considered financially viable in the past. So when we talk about extra financials in the old literature that we published in the past, I would say we should rephrase that into properly financial, because if water, again, as a price, is a financial issue, the one we're tackling today.
And so too, I suppose, as it's hitting the bottom line of some of these companies with regards to increasing CapEx and OpEx, whether or not the price reflects that will be to be seen, I think. But some of the risk interventions that Naomi mentioned, where companies were having to spend much more money upfront to secure their access to water, regardless of the price that they have to pay, clearly is a significant concern, I would imagine.
Well, you know, okay, we worked together. We sponsored one of the groundbreaking, I would say, CDP publications on water, and Kate led it with extreme professionality. I mean, it was the first paper on those issues. It was about metals and mining, a sector that per se consumes a lot of water and has water as one of the main costs in the production of what they do. So what we found out is that not only the P&L, hence the cost of water itself increases, but it's the CapEx. So basically, it's the plants that companies have to face in terms of expenses year after year, and the maintenance of those plants need to be updated in order to manage the water better, because it's more scarce and it costs more. So it has an effect in all of the valuation of a company, not only in the expenses of the single financial report of 1 year.
Thanks, Gianluca. And so reflecting on this around the potential, I'm nervous to use the phrase material, but it's certainly relevant, I think, today, and the substantive or significant, there are many words that you can use to describe these impacts. Our analysis indicates that tackling water-related issues remains the responsibility of the corporate social responsibility teams within many companies. And in fact, board-level oversight or strategic awareness of the potential impacts remains incredibly low. Perhaps you could reflect upon that, and what advice would you give to companies to perhaps change that? Would you expect it to be changed?
I would say yes, because as I said before, we started a long time ago, but long time is 20 years. And if I can give a little bit of a hint on what time means in these structural changes, the New York Stock Exchange needed 100 years before the companies were forced to release a financial statement. So we're just 20 years from the moment we started to talk about it. Maybe it's early days. But what I have seen across the years is that the more and more companies are getting ready to disclose those numbers. Very often, I have seen in the lobbying circuits around Brussels, where we have the European Parliament, that companies do much more than what they communicate. And for us investors, it's really important to know from those companies what good things they really do. Even those they don't, but very importantly what they do. Very often they don't know that communicating this, they give confidence to the investors to have a more stable approach when they buy their stocks.
Well, that's very interesting, Gianluca, and I couldn't agree more. When you have a meeting with a company, you typically talk to the IR team, I suppose. Do you ever engage with the CSR team, or do you think that there's an opportunity there to perhaps bridge that gap? Should investor relations teams be learning more about what is actually happening within their CSR teams, because it can often be so attractive to you as an investor?
The way things work today is a bit different from what I would like to see. In fact, when there is a roadshow of a company, usually the CFO or the investor relation person or together travel around the globe to present their company to the investors. If you need to have CSR information, you have to tell them before, much more in advance. So not necessarily all the investors are interested in that roadshow, so that makes it a little bit of a burden for the company to take with them all the CSR team or one person that is specialized in these issues. So very often they do not disclose these issues because they don't know what to talk about. Very often they don't know that the companies might be interested. And again, it's on the pension funds, on the asset owners, the ball to kick, because they ask the asset managers to be engaged in these issues, and the asset management firms meet the companies.
And are you seeing, my final question, are you seeing, or do you anticipate more pension funds asking, making that request of you as an asset manager and other asset managers, and no doubt Sasha will also have something to say about this?
I would say I'm worried of how fast this is happening, because we need to be ready with the amount of people to cover for those requests. Yes, it is happening, and it's happening very fast.
Excellent. Thank you very much.